guys, welcome back to my channel. In today's video, we're going to be talking about Theta. So I'm going to do kind of a deep dive into Theta. So if you guys may or may not be aware of the options Greeks, so when it comes to options trading, there's something called the Greeks. So that's your Theta, Delta, Vega, Zega, and Rho. So what I'm going to be doing is going to be kind of a 3 to 4 part series. I'm going to talk about each single Greek and how they affect your premium prices, your contract prices, how your contract pays out, options volatility, etc. So all of these are going to have an impact on how your premium is priced, and in turn how much profit you make off of a specific contract dependent on the Greeks. So the Greeks play a very big role in how your premium is priced. In today's video, we're going to do, like I said, a deep dive into specifically Theta. So in this video, we're going to go through, like I said, what the Greeks are and then Theta specifically. And I just want you guys to be able to understand how important the Greeks are and how big of a role they play and how successful you are as an options trader. That being said, don't forget to like and subscribe to my channel for more videos and more content. And yeah, let's just go ahead and get started. Alright guys, so let's go ahead and get started. So I'm going to go through, like I said, Theta today. We're going to go through kind of an overview of what the Greeks are and what they represent, and then we're going to go through Theta specifically. So what are options Greeks? So the Greeks are used to pretty much measure the risk of an options contract. So they measure a whole bunch of different things that then in turn go into how that premium is priced and how your options contract will play out into its date of expiration. So the 5 different Greeks that we have are going to be your Delta, your Gamma, your Theta, Vega, and Rho. Theta we're going to go through today. We'll go through the others in a different video. 2 Greeks that I use the most frequently, or I pay attention to the most heavily, are going to be my Delta and the Theta. I think those have the biggest impact on your premium price and how your contract pays out, the risk management to that contract, etc., etc. You can use these to your advantage. There's a lot of different options trading strategies that you can actually implement using specifically just the options Greeks. Once you really get the hang of what the Greeks are, how they're utilized, how they affect your options contract, you can then use them to your advantage. So that's why it's so important to understand what the Greeks represent, how they affect the contract, and how you can utilize them to your advantage when you're trading options, okay? All right, so let's go ahead and talk about Theta. So Theta measures the options time decay. So what this means is pretty much the rate at which an options contract loses its value up until its expiration date. So usually what you will see is that the closer to the expiration date that an options contract gets, it starts to lose its value a little bit more. The premium doesn't fluctuate as much, or it's extremely volatile, and you start to lose a lot more on your premium. So as your expiration date draws closer, your Theta increases. And as your Theta increases, that time decay is going to slowly eat up your premium price. Some things you should know about Theta is that longer term contracts usually have a Theta of 0 because they are not going to lose value on a day-to-day basis. So the further out expiration that you have, the lower your Theta is going to be, because that contract is not going to lose value on a day-to-day basis. Your Theta is going to be a lot lower for further out contracts versus contracts that are weekly or 2 weeks out. So say, for example, you have a call option with a premium price of $3, okay, and a Theta of negative 0.05. With everything else constant, so we're not talking about any of the other Greeks, and we're not talking about IV or anything like that. All we're focused on right now is Theta. So say you want to buy a call option, premium price is $3. The Theta on that call option is negative 0.05. What this means is that every day that contract gets closer to its expiration date, it's going to lose 5 cents per day on that contract price. So with everything else constant, 2 days after you purchase that $3 premium price contract, that $3 call contract, it would fall to $2.90 after 2 days with the theta of negative 0.05. Losing that 5 cents per day, you're losing 10 cents in 2 days, the contract would fall to $2.90. The theta is going to be highest for at the money contracts, and as the stock moves further into the money, the theta starts to decline. Also, theta on weekly contracts, you're going to start to see, like if you start to pay attention to theta, you'll see that contracts on Thursday and Friday have the highest theta. That is when theta is at its peak. So you will start to notice that your premium loses a lot more value. So the week of the expiration, you will notice, and theta is usually known to options traders, or Thursday is usually known to options traders as theta Thursday, because theta starts to reach its peak, and you'll start to see that as your contract continues to move. You'll notice that you'll lose value if you're bag holding from a Monday into a Friday. The contract is going to require a bigger, more significant move from the underlying stock in order for you to make up that premium price. So if you're bag holding from a Monday into a Friday and you're down from Monday to Thursday, usually it's going to be a lot harder unless that stock makes a very significant move for you to make back that premium price. That's why you should not bag hold a same week expiration contract. So if you bag hold, I would not bag hold I wouldn't bag hold in general, but if you're going to bag hold a position, I would get rid of it latest by a Wednesday. Also, another thing that I've noticed, people will usually say that, they're holding a position, a swing trade position, either on a Thursday or Friday, or a day trade position on a Thursday or Friday, and they'll be down on the position, but the stock makes the move up or down if you're in puts or calls. If you're in calls and the stock makes the move up, I have a lot of my students ask me, I didn't make the premium's not moving, or I'm not making the premium back, or I'm not up yet, even though the entry point, say for example, you entered at a level of 300, stock pulls back to 298 on a Thursday, it moves back up to 200, you could still potentially be down on that position, even though the price point that you entered, stock is back up at that price point. But because time decay is working against you, you're not going to be able to make up that premium price. The stock's going to have to make a more significant move. Also, just notice that higher volatility stocks are going to have a higher theta versus lower volatility stocks. There's not a, I know I'm going to get in the comments, what is a good theta to look out for. There's not a specific theta that you need to be looking out for. You just need to be aware of when your contract expires so that you can use theta to your advantage. If you wait to the end, the same week expiration, you're holding a swing, you're down on it, you're not going to be able to make it up the same week. I always recommend, if you're in a swing and you're down, you need to close that swing at least 1 week prior to the expiration date, because if you let that swing go into the week of expiration, you're more likely to lose a lot more on that premium price the week of expiration versus if you had let it go the week prior. Alright guys, so I'm going to show you 2 different stocks with 2 different levels of volatility. I do want to let you guys know that today is Monday, July 26th. This entire week, there's a lot of earnings reports. So what you'll notice is that IV's higher on a lot of these stocks. Premiums are jacked up. So we may see higher thetas for these as well. So just keep that in mind. Alright, for Amazon here, we can see we have the theta here. When you come to the options chain on Thinkorswim under trade, the trade tab, options chain, if you go to layout down here, it'll let you change whatever you see on your options chain. So I just selected Delta, Gamma, Theta, Vega. It'll show you all 4 there. If you want to customize it, you can customize it as well. We can see here that the theta on the at the money strikes here, because Amazon's currently at $36.99. So your 3,700 and your 36.95 are going to be your at the money strikes. And you can see theta is at the highest at those at the money strikes. As you move further out of the money, theta starts to drop, and further into the money, theta starts to drop as well, because as the stock moves further into the money, that premium is going to gain more. Whenever your strike price moves into the money, that premium gains more. You'll start to see that the premium fluctuates a lot more and you gain more on that premium, so that's why the theta tends to drop. So just look at the difference between 1 week and how much risk management you can apply just looking at theta when you're swing trading or day trading. Even if you just trade 1 week expiration out, look at how much less risk you have on the table just focusing on theta. The theta on this same week expiration is around $11. The theta on next week's expiration is $4 and around 50 cents. So that's a 6.5 point difference on just a 1 week expiration. So this is why I suggest all the time, if you are swing trading, to manage your risk a lot more as a newer options trader or even an experienced options trader. Always helps to swing at least 1 week out, because if the stock does not make the move that you want in that week, you still have that extra week to fall back on. On top of that, theta is not working as highly against you as it would have been if you bought the same week expiration. This is a 6.5 point difference on theta. So you're losing $11 on this. So you're losing $11 per day on this week expiration, and you're only losing $4.50 per day on next week's expiration. So that's a huge difference on a premium price, and I don't think a lot of people understand that. So when they buy a contract and it's the same week expiration and it gets to Thursday or Friday, and they're just looking at the contract and they're like, it's not moving, even though the stock is moving, it's because time decay is moving against you. That premium has already lost a lot of value because it's reached its theta peak. So that's Amazon's options chain. Now let me show you a stock like Apple. Right. So just opening Apple here, Apple is trading around 149, it looks like. So your 150 and your 149 are going to be your at the money strikes. Again, same concept, at the money higher thetas. As it moves further into the money and out of the money, your theta drops. And you can see here how much of a difference it is in the premium price, how much of a difference it is in your theta as well. So obviously Apple contracts are a lot cheaper. Time decay, the theta price point is going to be a lot smaller. So you're going to lose 40 cents on the day on an Apple contract versus $11 on a day on an Amazon contract. So obviously Amazon moves in bigger increments. You gain more on the premium price when an Amazon contract moves versus an Apple contract. So whenever anyone asks me what's a good theta to look out for, there's not necessarily a specific number. You just need to pay attention to the stock that you're watching and how its theta affects the contract premium, and usually where the median theta is for the same week expiration and when theta is at its highest. But you'll always notice that theta's had its highest Thursday and Friday, same week expiration, and then the further out you go, the less that theta is going to affect your premium price. And you can see this on Apple here, 40 cents to 15 to 10 to less than 10 cents on a 3 to 4 week out contract.
Alright guys, so that's it for this week's video. Thank you so much for watching. If you have any questions, comments, concerns, don't forget to comment down below. Also, if you have any ideas for any videos you guys want to see, also comment down below. And I will see you guys in the next video. Bye!